Not gold, not silver, not copper. This metal will explode in 2026, and if you're not paying attention right now, you're about to miss the biggest wealth transfer of the decade. While everyone's been obsessing over Bitcoin and tech stocks, a quiet revolution is happening. The world's largest companies are scrambling, governments are in panic mode, and this one metal sits at the center of it all. I'm talking about uranium. Yeah, I know what you're thinking. Nuclear power? Isn't that dangerous? Isn't that old technology? That's exactly what they want you to think. But here's what's really happening behind closed doors that will shock you. In September 2024, Microsoft signed a deal worth $6 billion to restart 3 Mile Island. Yes, that 3 Mile Island, the site of America's worst nuclear accident. They're bringing it back online. Why? Because they're desperate for power. Then, in October, Google announced they're building 7 small nuclear reactors. Amazon is investing in nuclear. Meta is signing 20-year nuclear power deals. These aren't coincidences. This is a full-blown scramble for uranium. And here's the kicker that should terrify and excite you at the same time. There isn't enough uranium to go around, not even close. But before we dive deep into why this market is about to explode, smash that like button and subscribe to the channel. Trust me, you're going to want to follow what happens next. Let me paint you a picture of what's actually happening right now. Every time you use ChatGPT, you're burning electricity. Every time you ask an AI a question, somewhere a data center is consuming massive amounts of power. And I mean massive. We're not talking about a small increase here. According to Goldman Sachs, data center electricity demand is going to surge by 160% by 2030. Let me say that again, 160% in just 5 years. The US consumed 183 terawatt hours of electricity for data centers in 2024 alone. That's more electricity than the entire country of Pakistan uses in a year. And by 2030, that number jumps to 426 terawatt hours. We're talking about more than doubling in 6 years. Here's why this matters. A typical AI-focused data center right now consumes as much electricity as 100,000 households. The new ones being built, they'll use 20 times that amount. Think about that. One data center will use as much electricity as 2 million homes. But here's the problem that's keeping these CEOs up at night. Solar and wind can't handle this. Yes, they're great, but they're not reliable 24/7. When the sun sets and the wind stops blowing, those data centers still need power. They can't just shut down. You need something that runs constantly, never stops, produces 0 carbon emissions, and can power these massive facilities around the clock. There's only one answer: nuclear power. And nuclear power needs uranium. More than 63% of global investors now believe AI-related electricity consumption will become a major driver for nuclear planning over the next decade. This isn't speculation anymore. This is happening. China is already way ahead. They approved 10 new nuclear plants in 2024 worth $27 billion. They're on track to become the world's largest nuclear power market by 2030, overtaking both the United States and France. And get this, 15 new nuclear reactors are expected to come online globally in 2026 alone, adding 12 gigawatts of new capacity. After a terrible year in 2025 where the industry actually shrank, 2026 is shaping up to be the year nuclear makes its massive comeback. Now here's where it gets really interesting, and this is the part that's going to make some people very, very rich. Kazakhstan is the world's largest uranium producer. They control about 40% of global supply. In August 2025, they made an announcement that sent shockwaves through the industry. They're cutting production by 10% in 2026. That's 8 million pounds of uranium just vanishing from the market. That's 5% of the world's primary supply gone. But it gets worse, way worse. You see, Kazakhstan uses something called in situ leaching to mine uranium. It's an efficient process, but it requires massive amounts of sulfuric acid. And guess what? They're running out of it. Their new sulfuric acid plant won't be ready until 2026 at the earliest. Meanwhile, they're also dealing with new mineral extraction taxes that just kicked in, eating into their profits. The tax rate started at 6% this year, goes to 9% in 2025, and jumps to a maximum of 18% from 2026 onwards. So Kazakhstan has every incentive to produce less uranium, not more. They explicitly said the current uranium prices aren't high enough to justify returning to full production. Think about that. The world's largest producer is pulling back right when demand is about to skyrocket. But the supply crisis doesn't end there. Cameco, one of the major Canadian producers, is struggling at McArthur River. They've had mill downtime and production setbacks. Their target for 2025 was 18 million pounds. They're only going to deliver 15 million. And here's something that should terrify the industry. Cigar Lake, one of the world's most important uranium mines, will be offline in 10 years. McArthur River has 15 years left. The two biggest projects the entire industry relies on are running out of time. Where are the replacements? They don't exist yet. New uranium mines take 7 to 10 years to develop from start to finish. The math doesn't work. Right now, mined uranium only covers about 75% of reactor requirements. The rest comes from secondary sources, old stockpiles, and recycled material. But those secondary sources are drying up fast. They're projected to drop from supplying 11 to 14% of demand today to just 4 to 11% by 2050. We're looking at a massive accelerating supply deficit starting in 2026. Now let me hit you with the most shocking part of this entire story. And this is where national security and geopolitics collide with massive investment opportunity. Russia controls 44% of the world's uranium enrichment capacity. Let me repeat that. Russia controls nearly half, but it gets more complicated. The next generation of small modular reactors that Google, Amazon, and Microsoft are all investing in, they don't use regular uranium. They need something called HALEU, high assay, low enriched uranium. It's enriched to between 5 and 20% uranium-235 versus the 3 to 5% that traditional reactors use. And guess who's the only commercial producer of HALEU in the world? Russia. 100% market control. The United States passed the Prohibiting Russian Uranium Imports Act in 2024. It went into effect with $7 billion allocated to build domestic uranium enrichment capacity. The problem? You can't build enrichment facilities overnight. The US currently has only one operating enrichment plant, owned by Urenco, with a capacity of 4, 9 million separative work units per year. The US needs about 15 million per year just for current reactors. We're not even close to self-sufficient. And for HALEU, the entire US produced only 900 kilograms in 2024. The projected demand by 2035 is over 50 metric tons per year. That's a 55 times increase needed in just over a decade. Right now, American advanced reactor developers have essentially no choice but to rely on Russian HALEU for their first demonstrations. Every single one of those deals Microsoft, Google, and Amazon signed, they're all banking on a fuel supply that doesn't exist yet outside of Russia. This is a national security crisis hiding in plain sight. And it's going to force uranium prices much, much higher. Let's talk about what this means for prices, because this is where fortunes will be made. Uranium spot prices in 2025 have been range-bound between $63 and $83 per pound. Sounds boring, right? But look at what's happening with long-term contracts. Long-term uranium prices have climbed from $80 to $86 per pound in 2025. And here's the key. Utilities can afford to pay way more. Because uranium fuel is such a small part of their total operating costs, they can afford to sign contracts at $120 or even $130 per pound without breaking their budgets. More than 85% of investors surveyed expect uranium prices to rise in 2026, with most pointing to a range of $100 to $120 per pound. Some are projecting upside scenarios as high as $135 per pound if supply fails to respond. But here's what most people are missing. The real price discovery hasn't even begun yet. You see, utilities have been able to delay procurement because they had existing inventories and old contracts, but those are running out. The World Nuclear Association forecasts that uranium demand will jump 28% by 2030. Meanwhile, supply will only increase by 18%. That's a massive gap. By 2040, demand could more than double to over 150,000 metric tons per year, compared to about 67,000 metric tons today. The supply deficit by 2026 is estimated at 20 million pounds. By 2035, that deficit is projected to grow to 130 million pounds annually. Utilities are about to face a moment of reckoning. They've been slow to contract, hoping prices would fall. But 2026 is when that strategy runs out of road, when utilities finally start panic buying uranium to secure their fuel supply for decades. That's when prices will truly explode. Now let's talk about something even crazier that most people don't know about. The US government is getting directly involved in the uranium market in ways we've never seen before. President Trump signed 4 executive orders in May 2025 aimed at completely transforming America's nuclear sector. The goal? Increase US nuclear capacity from 100 gigawatts in 2024 to 400 gigawatts by 2050. That's quadrupling capacity in 25 years. And they're not messing around. The US government signed an $80 billion deal with Westinghouse to build large-scale nuclear reactors, specifically to support growing electricity demand from artificial intelligence. But here's where it gets controversial. The government is now making equity investments in mining companies. They're providing massive loans. They're doing offtake agreements for future production. They're using every tool they have to reshore the uranium supply chain. Some in the industry actually don't want this. The utilities worry the government will drive prices higher. Some producers think government intervention will distort the market. But it's happening anyway because this has become a matter of national security. There's even talk of creating a strategic uranium reserve, similar to the strategic petroleum reserve. Imagine the US government buying and stockpiling uranium. That alone would remove millions of pounds from the market and send prices soaring. Uranium was also just reinstated to the US Geological Survey's final 2025 list of critical minerals. That classification unlocks all sorts of financial support and domestic supply chain tools. The International Energy Agency forecasts that annual nuclear investment will rise from over $70 billion today to approximately $210 billion around 2035. This is a massive, coordinated global push. Let me give you some specific examples of just how desperate these tech giants are for nuclear power. Microsoft's deal to restart 3 Mile Island Unit 1 by 2027 is a 20-year exclusive power purchase agreement. Constellation Energy is investing $6 billion to bring it back online. This is a reactor that's been shut down since 2019. They're reviving it specifically for Microsoft's data centers. Meta signed a deal with Constellation for 1 gigawatts of nuclear energy from the Clinton Clean Energy Center in Illinois. That's a 20-year commitment worth billions. The facility was literally scheduled for retirement. Meta's money saved it. Amazon bought a data center campus in Pennsylvania, powered by the Susquehanna nuclear plant, for $650 million. Then they expanded the deal. Talon Energy will now provide Amazon with 1.9 gigawatts of nuclear power through 2042. That's enough to power 5 million homes. Google's deal with Kairos Power is for 7 small modular reactors, delivering 500 megawatts by 2035. They're betting billions on technology that doesn't even fully exist yet commercially. And here's what's wild. These are just the deals we know about. How many more are being negotiated right now in private? Duke Energy just signed agreements with Amazon, Google, Microsoft, and Nucor. Dominion Energy is working with multiple tech companies on small modular reactors in Virginia, which is a data center hotbed. Even more interesting, there are companies trying to repurpose naval nuclear reactors from aircraft carriers to power data centers. A company called HGP Intelligent Energy has a project called CoreHeld that wants to deliver 520 megawatts for US data centers by 2029 using reactors designed for nuclear aircraft carriers. This is how desperate the situation has become. We're literally looking at using military nuclear technology to power Google searches and ChatGPT. Now, here's the truly shocking part that ties everything together. We're heading into what experts are calling a two-speed market for uranium. In the short term, spot prices might stay volatile, but long-term fundamentals are screaming bullish. Sprott Asset Management, one of the biggest players in the uranium space, describes the market as being at a turning point. They expect the supply deficit to widen significantly over the next decade as global mine production continues to lag reactor demand. And get this, some analysts believe we need triple-digit uranium prices, meaning over $100 per pound, as the minimum to reliably incentivize new capacity. Not the maximum, the minimum. When you factor in capital intensity, schedule risk, and supply chain constraints, some experts are talking about prices needing to go to $120, $130, even $135 per pound to get enough new mines built fast enough. But here's the catch that makes this even more explosive. Even at those prices, new mines take 7 to 10 years to develop. So even if prices spike tomorrow, new supply won't come online until the early 2030s. That creates a perfect storm. Skyrocketing demand from AI and data centers hits in 2026 and accelerates through 2030. But new supply can't possibly arrive until 2032 or later, even if every project goes perfectly. And what happens to prices in that gap? Nobody knows for sure, but the laws of supply and demand are pretty clear. Let me break down the timeline of what's coming, because timing is everything. 2026 is the inflection point. This is when utilities can no longer delay contracting. This is when 15 new reactors come online. This is when Kazakhstan's production cuts hit. This is when the supply deficit really starts to widen. Right now, the uranium spot price is around $77 to $80 per pound. Long-term contract prices are at $86. But remember, utilities are the slowest actors in the market. They move like glaciers. Industry experts don't expect aggressive utility contracting until 2026. That's when their existing inventories run too low. That's when they have no choice but to lock in long-term supply at whatever price necessary. And when that contracting wave hits, it's not going to be small. We're talking about utilities trying to secure fuel for reactors that need to run for 40 to 60 years. They need certainty, they need volume, and they'll pay for it. By 2030, we're looking at a shortfall of somewhere between 20 million to 130 million pounds of uranium per year, depending on whose estimates you believe. Even the conservative estimates show a massive deficit. The World Nuclear Association projects global uranium demand will reach 746 gigawatts of electrical output by 2040. Their previous forecast had it much lower. They just revised it upward by 90%. Think about that. A 90% upward revision. China alone is building more nuclear capacity than the rest of the world combined. They're forecast to overtake the US as the world's largest nuclear power market by 2030. And China has been strategically investing in uranium-rich countries around the world to secure supply. Meanwhile, the US is scrambling to catch up. Europe is scrambling. Everyone's scrambling. And there isn't enough uranium to go around. Now, let's talk about the companies and investment opportunities, because this is where the money is going to be made. Cameco is the world's second largest uranium producer. They own 70% of McArthur River Mine. They also acquired Westinghouse Electric, giving them exposure across the entire nuclear fuel cycle, from mining to reactor manufacturing. When these nuclear deals started getting announced in late 2024, Cameco's stock jumped 2% in a single day. NuScale Power, which develops small modular reactors, rocketed up 6% and hit all-time highs. Kazatomprom is the giant, producing about 21% of the world's uranium. As the world's largest producer, they have pricing power. Their strategy of value over volume means they're willing to restrict supply to keep prices elevated. That's exactly what you want if you're invested in uranium. Then there are the pure play developers. NextGen Energy has the Arrow deposit in Canada's Athabasca Basin. It's some of the highest grade uranium in the world. These projects become economically viable at higher uranium prices. Energy Fuels is America's largest conventional uranium producer. With the US government pushing for domestic supply, they're positioned to benefit from policies that favor American producers. But here's something most people miss. There are also physical uranium funds. Sprott. Physical Uranium Trust holds actual uranium, not mining companies. When they buy, they remove uranium from the spot market, which tightens supply and pushes prices higher. In late December 2025, Sprott increased their uranium holdings by 100,000 pounds. Other physical funds followed. This buying pressure is what drove uranium prices from the mid-70s toward $80 at year-end. The uranium mining stocks in general have been on a roller coaster. They were range-bound for most of 2025, then had a V-shaped recovery in the second half of the year. Smart investors have been accumulating during the volatility. And here's the thing, we're still early. The real move hasn't happened yet. When utility contracting kicks in, when supply deficits become undeniable, when the AI power crisis becomes mainstream news, that's when the real explosion happens. Let me address the elephant in the room, the risks and controversies. Yes, nuclear power has risks. Chernobyl, Fukushima, 3 Mile Island. These accidents shape public perception for decades. But here's what's different now. Modern reactor designs are fundamentally safer. Small modular reactors have passive safety features. Even if everything fails, they can't melt down like old reactors could. The technology has evolved dramatically. The new reactors being built by companies like Kairos and X Energy use something called TRISO fuel. It's uranium encapsulated in layers of carbon and silicon carbide. These fuel pebbles can withstand extreme temperatures. Even in worst-case accidents, they won't melt. Nuclear waste is still an issue, yes. The US doesn't have permanent geological storage for high-level radioactive waste. But compared to the climate crisis and the alternative of burning more fossil fuels, the nuclear waste problem is manageable. And here's the reality. The world has already decided. China isn't asking for permission. They're building dozens of reactors. India is ramping up. The UAE has state-backed expansion programs. The Middle East is going nuclear. Asia is going nuclear. The West can either participate in this nuclear renaissance or watch from the sidelines, while China and Russia dominate the entire supply chain. That's the geopolitical reality. There are also economic risks. Solar and wind are now cheaper than nuclear on a per megawatt hour basis. Battery storage costs are dropping fast. Maybe renewables plus storage can handle the baseload problem without nuclear. But here's the counterargument. Scale and reliability. You can't power a data center that needs 5,000 megawatts continuously with solar panels and batteries. Not yet. Maybe someday, but not in 2026 or 2030. Nuclear provides that 24/7 baseload power with a 95% capacity factor. Nothing else comes close for large-scale, reliable, carbon-free electricity. So what does all of this mean for you? If you're an investor, uranium presents an asymmetric opportunity. The downside is probably limited because prices are already near production costs for many miners. The upside? Potentially massive if the supply-demand thesis plays out. If prices go to $100 to $120 per pound, as many analysts expect, uranium mining companies could see their profits multiply. A 50% increase in uranium prices could translate to 200 or 300% gains in mining stocks because of operating leverage. If you're interested in energy markets, this is one of the most fascinating stories of the decade. We're watching a commodity market that was left for dead in 2010 after Fukushima come roaring back because of AI and data centers. Nobody predicted this connection. If you're concerned about climate change, nuclear power is probably necessary to meet decarbonization goals. Renewables alone can't scale fast enough to replace fossil fuels and power AI simultaneously. We need all the tools available. If you're worried about geopolitics, the uranium supply chain is ground zero for the new Cold War between the West and Russia-China. Control over uranium enrichment and nuclear fuel is strategic power in the 21st century. And if you're just fascinated by technology and the future, small modular reactors represent potentially transformative innovation. If they work as promised, they could power everything from data centers to remote communities to eventual space colonies. Here's my final take on where this is all heading. 2026 is the year when all these trends converge. AI demand keeps accelerating, data centers keep getting built, nuclear restarts happen, new reactors come online, Kazakhstan cuts production, Russia remains isolated from Western markets, utility contracting accelerates, it's a perfect storm, and uranium is at the center of it. The smart money is already positioning. Sprott is buying physical uranium. Tech giants are signing billion-dollar nuclear deals. Governments are making uranium a strategic priority. The World Nuclear Association is revising its forecasts dramatically upward. We're witnessing the beginning of what could be a decades-long uranium bull market. The last uranium boom in the 2000s saw prices go from $10 per pound to $137 at the peak in 2007. Could we see something similar? Maybe, maybe not. But the fundamentals right now are arguably even stronger than they were back then. We didn't have AI data centers in 2007. We didn't have climate change as an urgent crisis. We didn't have China building dozens of reactors simultaneously. The setup is there. The question is whether you're paying attention. Because if this thesis plays out, if uranium prices do spike to 100, 120 or higher, the wealth creation will be enormous. Early investors in uranium companies could see life-changing returns, but you have to be willing to look past the fear, the stigma around nuclear power, and the complexity of the supply chain. You have to be willing to bet that the world is making a historic shift back to nuclear energy after decades of neglect. I think it's happening. The evidence is overwhelming. From Kazakhstan to Microsoft to 3 Mile Island, every piece of this puzzle points in the same direction. Uranium is the metal that will explode in 2026. The question is, will you be ready when it does? If you found this video valuable, make sure you're subscribed and hit that notification bell. This story is just getting started and you're going to want to follow along as it unfolds. Drop a comment below and let me know, do you think nuclear power is the future? Or are you skeptical about this entire thesis? I want to hear what you think. Thanks for watching, and I'll see you in the next one.